Have you ever read about some hot new startup and thought, man, I wish I could have gotten in on the ground floor of that? You're not alone. For most of us, investing in those private early stage companies, the ones that could be the next big thing, has always felt like a closed off world. It's been reserved for venture capitalists and the super wealthy. But what if technology could finally pry that door open for the rest of us? Well, today we're diving into a new concept that's trying to do exactly that: stock block NFTs. So, what's really stopping us? Why can't we all throw a few bucks at the next potential unicorn? The simple answer is that the world of private equity has basically been a walled garden, protected by super complex regulations and investment minimums that are just way out of reach for most people. It's a system that, let's be honest, has been designed to favor the insiders. All right, so let's start by really digging into the problem itself. For decades, the money that fuels these promising new companies has traveled down a very, very narrow path. And this has created a system where the biggest opportunities, well, they're hidden behind some pretty high walls. And this slide, wow, it really lays out the two different realities, doesn't it? On one side, you have the venture capitalists and the insiders with a golden key to all these incredible deals. And on the other side, well, that's where most of us are, completely locked out. The issue here isn't just about having the money. It's about not even having access in the first place. But what if you could build a bridge? What if you could actually connect the old school, regulated world of Wall Street with the brand new, innovative tech of Web3? That's exactly the idea a company called Ritz Group Holdings is exploring. They're trying to connect two universes that seem worlds apart. So who are these bridge builders? Well, Ritz Group isn't some fly-by-night startup. These guys are a fintech company with some serious roots. They're even connected to a nonprofit that's been in the business of linking entrepreneurs with capital for 40 years. Their whole mission is pretty fascinating. They want to build tools that play by Wall Street's rules, but are built using tomorrow's technology. And this quote right here, it gets to the absolute heart of their strategy. They see that for most traditional finance firms, adopting blockchain is, like they say, a bridge too far. It's just too complex, too new, too intimidating. So Ritz Group's whole plan is to be that bridge, providing the licensed, compliant plumbing that opens the door for everyone else. So how does this all come together as a real solution? Okay, let's get into the nuts and bolts of the technology itself. How does a stock block NFT actually work? Okay, this is the key thing you have to understand. A stock block NFT is not just a JPEG. It's something they call an in-trust NFT. The best way to think about it is like a digital title deed. It proves you own real company shares that are locked away in a regulated, secure vault, a trust. The NFT is the key, but the actual company's stock is the treasure. The whole life cycle here is actually pretty logical when you break it down. First, a company puts a block of its shares into a secure trust. Then, an NFT that represents those shares gets minted, or created. From there, a smart contract, which is really just a piece of automated code, handles all the trading based on preset rules. Then, when the company has a big exit event, like an IPO, the trust automatically pays out all the people holding the NFTs. And finally, the NFT is burned or destroyed, which completes the whole cycle. Now, here's the real magic that makes this accessible to everybody. It's a concept called fractionalization. And it's a simple but incredibly powerful idea. You take one big, expensive thing, like a huge block of private company stock, and you digitally slice it up into tiny, affordable pieces. All of a sudden, you don't need $1 million to get in the game. You can own just a small fraction. Of course, anyone who follows the world of digital assets knows there's a giant elephant in the room: regulation. And that brings us to what might just be the most important part of this whole story: their really unique approach to compliance. It's a fair question, right? This whole space has a reputation for being a bit of a Wild West. So how on earth does a system like this even exist without getting into massive trouble with regulators? Well, their answer is absolutely fascinating because it completely goes against the grain. Instead of fighting the regulators, they're basically welcoming them with open arms. While so many crypto companies are arguing that their tokens aren't securities, this quote shows Ritz Group taking the exact opposite stance. They're loudly saying, yep, you bet our NFTs are securities and we're going to treat them that way from day one. It's a really bold, compliance-first strategy. And look, this isn't just them talking a big game. They've built a whole compliance framework to back it all up. They're working within existing SEC and FINRA rules, using a special broker-dealer license, and running a fully licensed trust to hold the actual shares. And this is the clincher. The smart contracts aren't there to get around the rules. They're literally built to enforce the rules automatically. That's a huge deal.
So we've seen the problem, we've seen the technology, and we've seen the compliance angle. So what does it all add up to? Let's take a look at the potential impact this could have on the future of investing for all of us. What's really important to realize is that this isn't just a win for the little guy. It could be a massive deal for the companies themselves. Traditionally, trying to manage thousands of tiny shareholders is an absolute logistical nightmare. This technology automates that whole process, making it possible for startups to welcome a much bigger, more diverse group of people who actually believe in their vision.
And this right here, this is where it all clicks into place for the individual investor. Fractionalization just shatters the old barriers to entry. We're not talking about needing tens of thousands of dollars to get a seat at the table anymore. This opens up the possibility of investing with an amount that's equivalent to the cost of just a single share.
So, when you really zoom out, the big vision here is the potential for a true democratization of capital. It's all about fundamentally changing who gets to share in the success of the next wave of great, innovative companies. It's about finally throwing open the gates of that walled garden we talked about at the very beginning.
Which leaves us with one final, pretty provocative question. We've seen a compliant, tech-savvy model for tokenizing private stock. So is this just a niche experiment? A cool idea that might fizzle out? Or are we looking at the very beginning of a fundamental shift in how we all invest? That's the billion-dollar question.